Hello, Maverick traders. Welcome out to your FX and crypto midweek update where we trade all things currencies. It is May 3rd, better known as Fed Day today. So, when we have a Federal Reserve meeting, we actually push the midweek back just a touch, just 30-minute later start today because we're going to trade that FOMC meeting together. So, let's jump into it and talk about what's happening in the markets, what we think the Fed will do, a couple of currencies that catch our eye that we're looking to trade today, obviously with a focus on US dollar pairing. So before we jump into kind of the results here, let's actually just really gear up for the Fed meeting. So if you come into this week's event, there's quite a lot going on. We had the RBA meeting on Monday night, Tuesday morning. It was midnight Eastern time. They raised by 25 basis points. That was more than what the markets had expected, where they expected that they would be on hold. But we talked about this. We traded the RBA live. I did that meeting with all of you, and we talked about there's a real debate. Usually, this is well guided, where you know exactly where the rate's coming in, and it's more about the upcoming results, right? It's the statement. What does this lead to? Usually, the rate decision is quite obvious, but this one was interesting and it created a lot of volatility because the market truly didn't know. Will they not? And it was about, well, I would say the majority thinking they would not, and then of course they did. So you saw the reaction, you saw that energy burst. That was kind of a fun one to do live. Watch that recording if you missed it. And then we have the Fed meeting today. Here, the market is expecting a 25 basis point rate hike. I suspect they've kind of given guidance that they are on that path. So I think the 5.25, the 25 basis point rate increase is likely, and most of the market realizes that. There is a minor debate. Well, I would say more people arguing that they shouldn't be doing it. There's a lot of that, but those same people basically say, well, they are going to raise, but I don't think they should be doing that. And then we've got the press conference after, and sometimes what happens in the Fed meeting is you'll have one reaction that completely gets offset by the next response. So imagine that the markets rally on the statement. You might have the press conference derail that, or vice versa. That happens fairly often. We've got the ECB meeting overnight. We've got Canadian and US jobs numbers. So it's just jam-packed this week with events, with catalysts to get the markets moving. And so the trade that we're going to highlight for the Fed meeting is actually a little different than normal in that it's going to be a little bit longer dated. Not longer dated as in holding for weeks on end, but you're going to see that we're going to trade a little longer time frame in a 4-hour, and that leads to probably being in the trade into tomorrow and the next day. It's not going to be a trade the news event where you're in and out pretty quickly within a few hours. Here, we might be in this for a couple of days. We might be holding this position if it's working all the way into Friday and the jobs numbers and so forth. So let's come over and dissect what the markets are doing, where we're going and such. The S&P down about 1% this week, crypto down about 2%, gold up 2%. Big mover is oil, which is just absolutely getting hammered. And this kind of goes hand in hand with the regional banks. The regional banks are seen as sort of the grease for the economy. Regional banks doing lending, doing a lot of things that fuel economic circumstances. And oil is pricing in an economic recession, saying there's likely to be a lot less demand for oil. We think that a lot of bad things are coming down the pipes and so forth. And that seems to be what it's pricing in. So it is the outlier this week. Well, this is about 2 weeks, 3 weeks from the big spike up that happened. Remember that OPEC cut production of oil, and a couple of weeks ago, oil had been running higher, and then it had that huge spike up. And we talked about that kind of being an exhaustion high, putting a punctuation mark at the end of the upside move. From that day on, oil basically went down. From that quote unquote good news day, oil traded lower. So if you bought oil thinking, oh, this is great, it was actually the worst time to buy, right? Today's the polar opposite. We've been selling off, selling off, selling off in oil, and then today, absolutely hammered to the downside. And I would argue this very much looks like a punctuation mark at the end of the downside move, an exhaustion low. Basically, liquidations happening, forced liquidations of people that were long oil futures and just getting carried out, behind the woodshed, and they're just getting killed, right? They're just losing their positions. The margin clerks are forcing those liquidations. It's just a bad scenario. There's a reason they call it blood in the streets. It's messy. But that, I think, is being an exhaustion low should be kind of an intermediate turning point where maybe today's not the perfect low. I'm not going to be shocked if it goes a little bit lower for a day or so, but basically marking the relative lows where now oil can start to recover out of that. That's how I envision this scenario, but oil is a big story here this week. Let's take a little closer look at a couple of things. So I've been harping on this cup and handle, and it's been playing out perfectly, by the way. We highlighted this, and from that point, it was the lows. I mean, the handle was perfect. Right down here where we were talking about 40.72 is where we highlighted that was about 30% the size of the cup. I mean, that's almost exactly down there where the bottom is. And again, it's not so precise that you can pick the exact number. That's not even what you're trying to do. You're saying, where should I be a buyer? Where should I stop selling, et cetera, et cetera. And it was the bottom. And from there, we bounced. Now we're in not only the cup and handle, but we're sort of in a little ascending triangle, just a little wedging pattern before, I suspect, an upside breakout. So the pattern still looks like it's intact. Obviously, to start this week, it started off pretty rough with a big sell-off on Monday. Theoretically, you could have just broken out already. So there is a little bit of, I would say, it's not bearish, but it's not quite as bullish as it otherwise could have been. My operating thesis is that I don't really want to get super bearish on this market until we have an exhaustion high up here somewhere. And where will it be exactly? I don't know. But I kind of trust that I'll know it when I see it and trust my eyes and my instincts when that happens. And we'll talk more about that. So currencies this week with oil getting hammered, CAD the worst performing in the currency group. CAD down 1%. Aussie and Kiwi slightly higher. Everything else kind of a mixed picture. US dollar down, Swiss franc and Japanese yen up, but not too much happening there. Cryptocurrencies lower pretty much across the board, with Bitcoin down a little worse than the other cryptocurrencies that you can see. So let's take a look at a few other items here. We would still have to grade the markets more bullishly. Trending still just above the 20, above the 50, getting some upward slope, so that's more bullish. If you look at international markets, it's the same thing. It's the same, it's not identical, but it's the same general idea that you stalled out at some resistance up there, that you basically have been in a consolidative pattern after a nice run, and a breakout seems to be the path of least resistance here. If we look at crypto, crypto has, I would say, from where we highlighted an exhaustion high a couple of weeks ago, that has been the top. And that's how these things should work, right? This was an exhaustion low. Now, I am not an ardent bull. I try to pick my spots. I'm not against buying or selling or trading or what have you. I was very much surprised that it rallied as much as it did. But given, well, let me say, I would not have predicted that big a rally down here. No way, no how. But given the news flow, it was the perfect storm, the perfect recipe for cryptocurrencies to go higher. I mean, what do they like? Well, they like bank failures. If there's an argument for cryptocurrencies, it's things like bank failures, chaos, and, you know, concern about currencies losing their value and devaluations and money printing and all these sorts of things. And it just sort of checked all the boxes for why you'd ever buy these. So no real shock and surprise there. Now, where do we go from here? You can see that we're in a little mini descending triangle pattern here. And if you break this level of support, now remember, this is our crypto basket, so this is all of them. If you look at each one individually, their charts will be a little bit different, but for the most part, this is the crypto market. And if we break the lower end of the range, it's a problem. But if we break the upper end of the range, then you can make the next move, the next leg higher. And I don't discount that as a possibility. You know, maybe this is a little cup and handle that's going to form over time or something along those lines. So for me, we'll just have to wait and see, really. If we start to break out to the upside, if we start to break to the downside, then you can weigh the evidence at that point in time and say, okay, do I trust it? Do I anticipate that that's going to work? And how far do I think it's going to go? So let's jump in here. 25 basis points expected. Let's talk currencies. What are we going to trade? Why are we going to trade it? I'm going to highlight a couple of things. I'm going to start with this chart of dollar yen. Now, I usually like to start my charts out a little further and then work my way in from there. So dollar yen is interesting. If we just look at dollar yen's chart on the daily time frame, well, we love patterns that are recognizable, right? So it could be a double top, that's possible, but I always bet on it not being, right? We bet on that this is some sort of ascending triangle or cup and handle, whatever you want to call it. It's usually you establish a big resistance, you retest it, and you back off the first time. But that back off is a buying opportunity for the next push higher. And if we were to price this out, we'd say, well, resistance is up here at 138. Support, the bottom of the cup, is down here at, I'm going to call it 130, right? 130 to 138. The cup is 8 points in size. The handle should usually be about 30% of the size of the cup. So 30% of 8 is $2.40. So as you back off from 138, you should go down to about 135.60. Well, we're right in that general space right now. In fact, we're just 135.35, it looks like, which is basically, the point being, we're right at about a 30% size here of this, right? The handle is usually about, now it doesn't matter if it's 33% or 29%, it's just in that area. If it starts to fall further than that, if it comes down here and starts breaking these levels, well, no, it's not working. It's not that pattern, right? There might be other things in play, whatever, but the cup and handle, I tend to like to buy when you're down about the handle size, which is about 30% of the size of whatever the cup was that it had built. So this would be the general buy zone for me for dollar yen on the daily chart. Let's see if other time frames agree. If we come into a 12-hour chart, well, not surprisingly, you see the exact same pattern, right? You see the resistance that's been established. You see the big cup, and it might even look prettier essentially. It might even look cleaner here, but you can see the dynamics in play. And this old resistance, new support, this was the breakout. We're declining on lighter volumes coming down and so forth. I mean, it has all the characteristics of this should be an area where we bounce. So the 12-hour time frame agrees. If I come into the 4-hour, we've made a deeper pullback. So now we start to not see the old resistance, which is fine. We know where it is. It's right up here, right? This was the retest of the big resistance established. But here you can see the prior breakout zone. And then I always love when there's patterns within patterns. If you look at our Bollinger Band system, on the 4-hour time frame, we're down at the lower Bollinger Band. We're still above the 50-period moving average. So I could trade it on the 4-hour time frame bullishly. The 12-hour, which is the next longer time frame, agrees. The daily chart also agrees. So you've got agreement there on these longer term time frames. Now, if I start to get into it too short of a time frame, then it gets a little bit more. The 1 hour doesn't look so good. The 30, but I'm not trading those. I'm going to trade on the 4-hour. Well, what does that mean? If we trade a 4-hour time frame chart, our stop out point is usually in the neighborhood of the time period we're trading. So if you trade a daily chart and you hit your stop, you might do that within about a day or two. If you trade a 12-hour chart, it might hit your stop loss if you're wrong about 12 hours, 16 hours later, maybe 8 hours, but in that time period. If we trade a 4-hour, we'll probably be hitting our stop loss and stopped out of this trade within 4-ish hours. Now, if it works, then it's good. Then you hold for longer, right? If it doesn't work, we're probably going to be stopped out in 4 or 5, 6, whatever hours. If it is working, we might own it for 10. We might own it for 24 hours. We might own it for 36 hours. I mentioned this at the start of class that we might own it for a longer period of time if it's really working. But if it's not working, you can usually kind of think of whatever time period you're trading off of, your stop out point is going to be somewhere around that. If I trade an hourly chart and I'm wrong, I usually hit my stop within an hour-ish. It's not an exact science, but within that general time frame. If the trade is working, and that's always a rule of thumb that I want my losing trades to be held for a shorter period of time, and I want my winning trades to be held for a longer period of time. So if we get stopped out, we trade the 4-hour, well, we'll be out of this in a few hours. If it works, we'll be in it for who knows. So let's put some parameters around this. And the way that I'm looking at this is really right around this 50-period moving average. I'm okay buying a little higher, getting a little confirmation. So I'm going to put my entry theoretically right up in here. Now I might be able to trigger in better than that price. We might be able to get it at 135.40, right? Or whatever. But I'll put my entry a little higher. That's about as high as I'm willing to go. My stop loss could just be right in here. Really, this candle, this hammer-like candle, it's more of what they call a dragonfly doji, where you don't have a body on it. It's more of a doji candle, right, with no body. But you can see the long lower shadow. A hammer usually has a little body to it, but the same general idea. Either way, it's kind of a bullish, what we would consider to be a candlestick reversal candle. And since you've been in a big run lower, oftentimes you'll see long lower shadow candles at bottoms. Long lower shadow candles at bottoms, right? That's pretty commonplace, where you'll see the long lower shadowed candles are at a bottoming point and then you rally. So we're sort of projecting that this is it. Now, as far as targets, I would go first conservative target would probably be about the halfway point of this range. So I'm going to draw something like this as a target. Now, even that is a decent risk to reward, but that'd be out fairly quickly. Here's our risk, here's our reward, and you're probably about 2 to 1 on that. If the trade is really looking good, you can probably target a move all the way up to here. And if you really want to get aggressive, you can really target well above that. Why? Well, we know this is a massive cup and handle. Now, the only way you're going to be able to measure this handle portion and then flip it on its top and have a target all the way up there, the only way you're getting up there is if you have a lot of patience and you're willing to hold through the weekend, because we're not going to get to that type of target until a week from now or something like that. So you'd have to have a really longer term time frame to get that. But any way you slice it, you really have three potential targets, I think. The first one is sort of the middle of the range. That's probably about a 2 to 1. The prior swing highs is probably about a 3 or 4 to 1 reward to risk. I'm going to call it, well, if that's 1, that would be 2 reward. That would be 4. It's probably like a 6 to 1 reward to risk ratio, actually. If you think about how big that is in comparison to how much size your risk is, that fits into that maybe 1, 2, 3, 4, well, maybe 4 or 5 times. So this is about a 2 to 1 reward to risk ratio. This is maybe about a 5 to 1 ish. And this, of course, would be like a 10 to 1 or whatever, where you're risking 1 to make 10. So depends on your time horizon, depends on how long term you're willing to be in it. I think the obvious would be to maybe look at taking some money off, and you could even layer out. You could basically say, well, I'm going to exit 40% of my trade here, 40% of it here, and then see if 20% of it can keep running longer term all the way up to this target. So you could do some partial exits or different things that way. It just depends on your style, depends on how confident, comfortable you are being long dollar yen and what your overall outlook is, how the trade is performing. If at any point in time I got a big exhaustion flush to the upside, some big thing that made me think that the trend was done, even if it's not quite to the target, imagine it happens right in here or something, I would certainly bail out if I got a really strong signal to do so. But anywho, that's really the currency that I am laser focused on and suspect that I will trade before today is done. So what would derail this? What we're going to be watching for, if I come into a shorter time period, let's say a 15-minute, and you're just watching this candle, one of the first things we're going to be looking for is energy. Now, a couple of things can happen. One, you get the announcement and this goes sharply this way. Well, you got energy, but it burst lower. Would I be tempted to buy down here? Maybe, but only if I felt really confident it was reversing and still holding that 50-period moving average on that 4-hour chart. If it really is below that, settling below it and so forth, then that's just a deal breaker. So it's possible we trade it and still buy down here, but less likely. We'll cross that bridge if we get there. The other scenario is good, solid energy, but it bursts this way. And if it bursts this way, then I'm very likely to hit the old transmit and send that order quickly to the market. And my price execution might be in here or wherever, right? I'm going to be ready and have a buy order ready. Now you can, in fact, you can right click here and snap, and I usually put my buy order a little above because a buy limit will buy at your price or anything below. So if I have it set up a little above, really ask yourself, how high am I willing to go? What's the highest price I'm willing to pay? And then I can just have it set up so that all I have to do is hit transmit. You know, imagine I'm trading 5 lots or whatever. Doesn't matter the size. That's up to you. That's based on your risk tolerance, how big your account is, etc. But say I have that ready, all I'd have to do is hit transmit. Now, if the trade is going for less than my limit, it'll still execute because I'll buy if it's at my price or lower. But at the moment I know I want in, I want to be able to hit a transmit and get my order filled instantly at my price or better. So we would kind of have that laid out where we would be ready and prepared to go ahead and hit that execute. Now you can see that this is bouncing a little. We'll come back into the 4 hour. If I put my cursor over the prior 4 hour candle, it gives me a high of 135.53. I'm willing to buy above that, but we're not going to go crazy on this. I'm going to say 135.55 would be my buy limit. And again, if it's trading at that price or below, it'll execute. And if it's trading at 135.43, it'll fill your order right then at 135.43. I would have a sell stop loss already in place. You can attach that order. You can right click on this before you hit transmit, and you'd have a sell stop, right? And my sell stop, again, would just be below these lows. I'm really not willing to keep holding as it's plunging down here, breaking the 50 MA, breaking this candlestick to the downside. That low is 135.06. We can call it 135.05, makes for really simple math of 50 pips. Now I would oftentimes put my stop just a little bit below, maybe another pip, 135.04 or something. This comes from years of trading, and it really doesn't matter as much now as it used to. They used to take advantage of people that would have their orders on whole round numbers and just go and trigger certain things. So back in the old days, I would even maybe put this stop at 134.93, and that may not make sense to you, but they would often go and hit 135 and then just go about 2 or 3 pips below. That sort of idea where they would just trigger it to hit those stop losses and then immediately burst higher and whatnot. I don't think it's as big a deal anymore, but here you're risking about 50 pips. And again, first target is really about the midpoint here of this trading range. So there's the low. We're projecting this to be the low of the range. We know that this was the high of the range, and about the midpoint's right in there. So your target's probably about 136. Let's just call it 30. This would be your sell target. You could use a limit order up there to sell. So you could sell if it's not working, sell if it is working, and your reward here is about 75 pips of reward. So not quite a 2-to-1, but in that neighborhood, right? So that would be, again, a quicker target. If you're stopped out or hitting that target, that's all going to happen probably within the next, let's call it 6 to 8 hours, over the next little bit. It's not going to happen instantly, but it's going to happen pretty quickly at those targets. All right, we're moving into the announcement. Let's jump over here and just watch. And you should see a burst of energy. It should become pretty obvious the moment it hits. Sometimes there's just nothing that happens. Sometimes it's just, quiet. But usually the clock ticks over, and then within a few seconds, you'll get the move. So see, the initial move was up, and then it spiked back down. I'm ready to transmit, so I would transmit this probably right in this area. Well, we're pretty close to our stop loss, but I would transmit in this area and really be willing to get into this, even though it's kind of trading towards the lower end of the range. Let me jump over. So because you're so close, I mean, you're only risking, you'd either have to move this stop loss to have a reasonable amount of risk, or you'd already be stopped out at the 10 or 15 pips of risk. But I'm looking at this as a certain possibility, and just move my stop a little bit and going to transmit. And I'm not willing to risk too much here, but I'm going to put 20 pips of risk. So I'm going to take my risk tolerance down. I'm going to put my stop, I've got it at 134.93. I guess I'm risking actually a little bit more than 20 pips because I got filled higher than where it's at. I got filled a bit higher. So 29 pips of risk, and we're down and probably going to hit that the way it's acting, but we'll see. If this gets down there to 134.93, well, it's a deal breaker. You saw the initial burst and then it got choppy. Sometimes that first move is just a fake out and then it immediately plunges, and that's kind of what has happened today. I thought we were going to get the burst and then it would do that choppiness and that would give us a good price execution. I think in this case I was wrong, and there's the stop out point. So you've hit 134.93. I completely understand if nobody traded that because it was going the wrong way. I was willing to put some risk in the trade because, well, it offered me an even better risk to reward. If this had been what I thought it was going to be, which is it initially jumped up, then it does the little choppiness, and I use that quickly to get filled, and then it goes up here. Well, now my risk was 20-ish pips or whatever, and now as it goes up here, my reward to risk becomes that much better. Imagine you sell here at 136.30 and you got filled at 135.22. Well, now you have 108 pips of reward and your risk was 20 or 20 whatever. Well, now all of a sudden, instead of 50 pips of risk for 75, now you're talking about 4-to-1 reward to risk ratios and so on. So I thought in the moment it was worth a shot. Seems to be the exact opposite, that the dollar is weakening, and we kind of turned it into a shorter term trade because we tightened everything up. We kept our stop in the same general area, but took a lesser risk. So that one didn't work out, and that happens from time to time. You'll see scenarios where the announcement will occur, the trade will do that chop, and then it'll take off, right? And it'll be a little delayed reaction. So I didn't think that that was anything too concerning, but obviously in hindsight, we could have been a little bit more patient and seen. The problem with that would have been sacrificing price. Now, depends on your personality. If you don't like the initial move, the choppy move, and you don't get the good price, you're going to have to pay higher prices if it chopped back up here. The benefit would be that at least you see it's going this way, right? The downside would be now your risk to reward is not as good. So I took a gamble. I suspect, I personally think this trade's still probably going to work. I just don't think, I think there was too much weakness here to manage it effectively. We would have had to really rework a lot of numbers and things, and it just frankly sold off too much. So I suspect it's probably still going up here, but no good on that one. All right, you are still my favorite. That's very funny. Uh, Everybody that trades will have experiences where We always say that it's almost better if you get stopped out quickly. Just put me out of my misery as fast as possible type of thing. The worst ones are where you sit there and it's doing nothing and nothing and it's wasting your time and attention, and then it finally stops you out. But I think we have probably the right thesis overall. It clearly didn't meet the the correct response though, in that I thought this should act as the swing low. Well, now you've wicked below that, right? And you're still in, if you look at these candles, you're still in the process of making lower highs and lower lows on the candle. See how each high on the candles is lower than the one before, and see how each low is lower than the one before. So that's still happening. It won't reverse. It basically hasn't pivoted until that trend stops and you trade above a prior candle pivot high. And we still haven't done that. So this might have been one where a little patience. I think I would still probably have jumped in by now, but I might have reworked some numbers where maybe I would be buying here and using this as my stop out point. I'm going to be wrong. I was going to lose some money here if dollar yen traded lower and breaks this level of support. So one way or another, if this doesn't set up where this bounce or the first one or whatever doesn't hold, like if I hadn't taken the first trade, I might very well be in it here. And let's imagine it trades back below this low and does hit that. Well, I would have been stopped out same way, probably for about the same risk, roughly. Do I wish, that I could go back in time and be in it now with that possibility? Well, I guess so, but I don't think that the idea was the wrong one. I've traded enough of these events that you'll see that little choppiness, and sometimes you got to be ready to act. And it wouldn't have shocked me if we were staring at one that was up here and we were chit-chatting about, hey, we're getting the movement we expected and we wanted, and now we've got some profit in here, and as it gets up here to our first target, we got to consider at least taking half off the table or something like that. So this one didn't work out that way, so we'll leave it there. The rest of the week, we've got plenty to keep us busy. So we've got ECB, we're trading that live tomorrow morning, 6:15 Mountain Time. That's 8:15 a.m. Eastern Time. We've got the currency recap that'll come out at night. Then on Friday, we are trading the payrolls report. Again, same time, 8:15 a.m. Eastern Time. So two more major events, two more live events that we're going to trade. Hopefully, a little bit better outcomes than today's, but we'll trade those live, looking at euro pairs tomorrow and then back to US dollar pairs on Friday. Thanks everyone for being here. Have a great rest of your day. We'll see you next time. Goodbye, everyone.